Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, February 27th, 2013. Thank you all for tuning in. There's a lot to cover. Let's jump right to the charts, and we'll start with the S&P 500 E-mini futures. You'll see that the futures are trading higher by about 2 points at the moment. They were a little bit higher to around the 1497 level, have pulled off, and now they are sitting really right around the 1494 area. So again, futures a little bit higher this morning. Yesterday, the market did rally up a little bit. Nothing compared to the sell-off, though, that occurred on Monday, even though you did have a decent little rally yesterday overall. So we'll see how this market shakes out today. There are a few different things that we do want to go over first. One is the European market. First, I should say, is that the European market is bouncing back a little bit. You do have Italy up, or the Italian market, the Milan market, FTSE MIB, up about 0.75%. So that's rebounding a little bit. That thing has been absolutely annihilated over the past week or two, and today getting a little bit of a bounce. It looks like Italy was able to auction off some government debt, and yields weren't as high as expected. So, I don't even know why people make a big deal out of that. The European Central Bank is buying up the debt to keep the yields artificially lower. So, again, I think the market is smarter than that, at least the market participants. But, I guess it's being sold to the public that it was a good auction. But whether it was or it wasn't, the bottom line is that you have the central banks in there intervening, helping to keep yields down, participating in that auction. So, it is what it is. We'll see how it plays out, but I think Europe is probably on the front burner these days. Traders should watch for that pretty closely. The German DAX, by far the most important European index, and that is only up 0.3% today. You do have France, which is the CAC 40, up about 0.8%, and Spain is up about 0.8% as well. Looking over the pond in London, which, remember, London can print their own money. Bank of England, they can print their own money. Only up about 0.2%. So I'm not seeing anything all that terrific there. But Europe is trickling higher this morning, so we're going to have to watch that closely. But overall, I just don't see the strength there, and the Italian bond auction is really not very impressive in my book. It may be sold to the public that way, but it's not very impressive at all. Okay, let's take a look at a few other things here. There's a lot of economic data out today. I believe at 8:30, which is in about 2 more minutes, we're going to have durable good orders. I also believe you're going to have pending home sales data at 10 a.m. Every day we get some of this home sales data. Home sales, pending home sales, contracts. So today it's going to be pending home sales data, and that's going to be released at around 10 o'clock this morning. So we'll have to watch for that. There are some earnings plays out there today. So that's also going to be important. We should have some gap plays for the chat room today. Looking back at the markets, we want to talk about gold. Gold today is trading down about $10. It did catch a nice big bid yesterday, up about 28 points. Today, gold is down about 10. So the GLD is trading right around 155.41. The GLD is a good proxy, a good barometer for gold. That closed yesterday at 156.22. Today it's trading at $155.41. So you can see it is down a little bit. If we take a look at light sweet crude today, which is flat, trading right at $92.63 a barrel. Let's take a look at the USO. USO is trading right at $33.28, basically where it closed yesterday. USO closed at $33.33. So just down about 5 cents from the close. What you do want to watch today is the dollar. Okay? Dollar is down a little bit this morning, down about 12 cents. But notice how the dollar has just caught a bid. You just got a nice spike up in the dollar. And now I'm going to flip back to the futures. And you'll see how the futures sold off. So that relationship is back. I know it wasn't intact in the month of January. And people were emailing me saying, hey, Nick, the dollar doesn't work anymore. It's no good. Listen, it's just light volume holidays that it takes a break. So just realize that the dollar... when the dollar goes down, the markets go up. When the dollar goes up, the markets go down across the globe. Okay, so that's what you need to remember. That relationship is still very much intact, at least at this time. Hopefully one day it decouples and we don't use it anymore, and that would be a sign of maybe better economy, better markets globally. But Right now, it is not. Right now, the dollar must go down for the markets to go up. That's the bottom line. Looking at a few other things out here, from what I could see, is that the durable good orders have just been released. So durable good orders have just been released. You had that little quick move down. Now we're getting another bid back up. Again, I don't even care what the durable good orders are. It looks like durable good orders fall 5.2% in January. But all we care about is the market's reaction, and that's really all we care about. I could care less about any of these reports, nor do I believe any of them. I just really care about how the market reacts and can we trade it and make money, and that's really what we want to do. But I think traders still need to be a little bit on the cautious side. Even though yesterday the markets rallied up a little bit, really wasn't all that impressive if you ask me. But we'll see how this thing trades going forward. Other than that, I'm not seeing a lot there. I do believe we have about 5 or 6 potential gap play setups for the chat room, so I'll leave it there today. I don't think there's anything else that I'm missing, and I'll see everybody, I guess, on the charts. All right, so we'll leave it there today. Have a great session, everybody, and we'll do it again tomorrow. Take care now.